So for investment in equity, we are to talk about your accounting for different share investment. Accounting for different share investment. Okay. So your shares can either be ordinary or your common stock. Then your shares, we also have your preference. Okay. So ordinary shares or preference shares. So for ordinary shares or common shares, we need to look whether it is 0 to 19. We have 20 to 50, and then more than 50% or 51% or more. So for ordinary or common, if that is 0% to 19%, we use your PFRS 9. It is known as FVTPL or FVTOCI. If that is 20% to 50%, we use your PAS 28. That is your investment in associate. More than 50%, we use your PFRS 3 with PFRS 10. We call this one your investment in subsidiary. For preference share, we will always use PFRS 9 regardless of the ownership. Take note of that. If it is ordinary, we classify. But if that is preference, regardless of the percentage of ownership, it is always PFRS 9. It is always PFRS 9. So for investment in equity, our topic will revolve around PFRS 9 and PAS 28 because that is the portion of your auditing problem. Now, let's start first with PFRS 9. PFRS 9. So under PFRS 9, again, we need to determine our initial measurement and then our subsequent measurement. So we have here FVTPL and then we have here FVTOCI. So under FVTPL, our initial measurement is only fair value. FVTOCI is fair value plus transaction cost. Whatever we have learned before in your debt as to initial measurement is still the same in your investment in equity as to your initial measurement. Next, we have your subsequent measurement. FVTPL is still fair value. FVTOCI is still fair value. Now, where will we place the changes in fair value? In FVTPL, we have we will place it in your profit or loss. In FVTOCI, we will place it in your OCI. Since there is OCI, we have this concept of cumulative gains or losses. On your cumulative gains or losses under FVTPL, there is no cumulative gains or losses because it is not applicable. While for FVTOCI, there will be a cumulative gains or losses. This cumulative gains or losses is, again, transferred directly to retained earnings. Why? There is no recycling for FVTOCI equity. Okay? No recycling for FVTOCI equity. What is only recycled is your FVTOCI debt. When we say recycle, we place the amount of your cumulative gains or losses upon reclassification or upon selling to the profit or loss. But since no recycling here, it means diretso siya sa retained earnings. It means diretso siya sa retained earnings. Now, after our initial and subsequent measurement, let's go now to your subsequent transactions. Subsequent transactions. So normally, for shares, there are only 3 items that are asked on your subsequent transactions. First, the gains or losses on fair value. Next, any dividend income. Third, we have your gain or loss on sale. Gain or loss on sale. So again, on your gain or loss on changes in fair value, for FVTPL, you place that in your profit or loss. FVTOCI, you place that in your OCI. Dividend income under FVTPL is profit or loss. FVTOCI, profit or loss. Gain or loss, profit or loss. FVTOCI, where will we place our gain or loss? On the sale of your equity security. FVTPL, is it in profit or loss, or is it in your FVTOCI? The gain or loss on your selling price will be placed in your OCI. Will be placed in your OCI. Take note of this difference. In your equity, ganito ang treatment natin. Pero sa ating debt, ang treatment natin sa gain or loss on sale, profit or loss sa TPL, sa TOCI, profit or loss din. Dito sa FVTOCI, OCI. Ngayon, dito sa gain or loss on sale, dalawa kasi yung kailangan nating i-account dyan. Sir, ano yung ika-account natin dyan? Normally, we have here your consideration received less your carrying amount. This is your gain or loss on sale. This gain or loss on sale will be placed in profit or loss if that is TPL, OCI if FVTOCI. After that, we can incur transaction costs on the sale. The transaction cost on the sale will always be placed in your profit or loss. Will only be placed in your profit or loss. And take note, the cumulative gain or loss in OCI will be transferred to retained earnings. There will be no recycling. So if you are asked how much will be transferred to retained earnings, these are your gain or loss on fair value and gain or loss on sale. Take note on that particular subsequent transaction on your gain or loss on sale. Ingatan nyo yung gain or loss on sale. Pag FVTPL, yung ating gain or loss on sale, profit or loss. Transaction cost, profit or loss. How about FVTOCI? In FVTOCI, gain or loss on sale is OCI, while transaction cost on the sale is profit or loss. Tignan nyo yung difference nilang dalawang yan. And lahat ng OCI natin, saan pupunta? Sa retained earnings. Bakit pupunta ng retained earnings? Kasi under FVTOCI, there is no recycling. There is no recycling. In short, it will go to your retained earnings. It will not pass through your profit or loss. Therefore, since we already finished the gain or loss on fair value and the gain or loss on sale, what's left on your accounting for your equity securities is your dividend income. What's left on your accounting for your equity securities is your dividend income. Now, for dividend income, since we're talking about your auditing, therefore, what are the items or our considerations? Our considerations for dividend income is first, the effect on the dividend income. Second, the effect on the number of shares. Third, the effect on the investment per se. And lastly, the effect on the cost per share. If ever, it will increase the dividend income, decrease the dividend income, number of shares, investment, or the cost per share. So we will take a look as to the effects on the following: dividend, number of shares, the amount of the investment, and the cost per share. So the first dividend income that we will talk about is your cash dividend. Cash dividend. So for cash dividend, by the way, for cash dividend, we will not talk already about the general entries at the date of declaration, date of record, and date of payment. So we will just look into the effect of a cash dividend. So in a cash dividend, it will increase the dividend income, no effect on your number of shares, no effect on your amount of investment, and no effect on your cost per share. Next, we have your stock dividend. For stock dividend, this is quite problematic. Why? Because you need to determine whether you are accounting using the old stock dividend or the new stock dividend. When we say old stock dividend, the accounting using PAS 32, PAS 39. Under the new, accounting using PFRS 9. PAS 32, PAS 39. Under the new, you account under PFRS 9. So under the old, generally, your entry is only a memorandum entry. If that is a memorandum entry, there is no dividend income, no effect on dividend income, but the number of shares will increase. The amount of investment has no effect. Therefore, the cost per share will decrease. Why will the cost per share will decrease? Because the number of shares increase. Next, under new or PFRS 9, the dividend income is considered as unrealized gain or loss on changes in fair value. Therefore, is it a dividend income? No effect. But it is considered as unrealized gain or loss, depending whether it is TPL or TOCI. Your number of shares will increase because of the stock dividend, while the amount of investment will also increase because you account for the changes in fair value. Sir, what is our entry there? Financial asset at FVTPL or FVTOCI and a credit to unrealized gain or loss. How about your cost per share? Your cost per share, since your number of shares increase and the amount of investment also increase, generally this can increase or decrease. Third question, when can we make use of the old stock dividend and when can we make use of the new stock dividend? If the fair value per share at the date of payment is given, then you use if given. If your answer is yes, use the new one. If the answer is no, use the old one. Ulitin natin. Your stock dividend, it is quite problematic nowadays because based on your problems, it can be the old one or the new one. So, sir, when can we determine that the problem is an old problem or a new problem? If the fair value of the share is not given, then it is the old one. If the fair value of the share is given, then it is the new one. And take note of the effects of the old and the new one. So that is for the cash and stock dividend. Next, for property dividend. For property dividend, a property dividend will increase dividend income, number of shares, no effect, amount of investment, no effect, cost per share, no effect. Next, liquidating dividend. A liquidating dividend is considered as a return of investment. Return of investment. So when we say return of investment, it means that there is now a giving back of what is invested on the company. Therefore, is that a dividend income? It is not a dividend income, so no effect. Number of shares will still remain, so no effect. But the amount of investment will decrease because it is considered a return of investment. Your entry here is a debit to cash and a credit to your financial asset at FVTPL or FVTOCI. And then, how about the cost per share? The cost per share, since the amount of investment decrease, the cost per share will also decrease. That is for the liquidating dividend. Next, we have your scrip dividend. A scrip dividend is a dividend in the form of a liability or in the form of a payment for a future receivable. Therefore, a scrip dividend is considered a dividend income, but number of shares no effect, investment no effect, and cost per share no effect. This is my tip for you. Whenever the dividend affects your dividend income, always the other items are no effect. Whenever the dividend affects the dividend income, the other items, number of shares, the amount of your investment, and the cost per share is no effect. But if the dividend income is not affected, it will affect the other items. Okay? So in short, it is either dividend income ang maapektuhan or ang aapektuhan niya ay yung number of shares, amount of investment, or cost per share. Tandaan yan. Pansinin ninyo, cash dividend, property dividend, and scrip dividend, lahat sila ini-increase yung dividend income. Pero dun sa ibang tatlo, wala na silang effect. Pero sa stock dividend and liquidating dividend, hindi niya in-effect or wala siyang effect sa dividend income. Therefore, maapektuhan niya yung other items, either number of shares, amount of investment, or cost per share. Why? Because normally in auditing problem, your question here is how much is the total dividend income? How much now is the ending number of shares? What is the cost per share? Therefore, if the problem is more of comprehensive, you know or you should know the total effect on all items which that particular dividend could affect. So number of shares, amount of investment, cost per share, and the dividend income. And take note, as I told you a while back, in your accounting for shares, generally in subsequent transactions, there are only 3 items that you need to take note of. The gain or loss on fair value, that is quite easy. You just compare the beginning fair value and the carrying amount, and that is now the gain or loss in fair value. Just do not forget where to place it. In FVTPL, P&L, or profit or loss, FVT OCI is OCI. In your dividend income, it is always profit or loss, whether it is FVTPL and OCI. In your gain or loss in sale, your changes in fair gain or loss on sale for FVTPL is profit or loss. For OCI, it is OCI. And take note of this. In computing for the gain or loss on sale, for gain or loss on sale, that is the amount received less the carrying amount, and the transaction cost will always be presented in profit or loss, whether it is FVTPL or OCI. And any items presented in OCI will be directly close to retained earnings. There will never be recycling. I hope you put that in mind. So since these 2 items, the gain or loss in the changes in fair value and the gain or loss on sale is quite straightforward, your main problem is the accounting for dividend income. Therefore, you must always consider and remember the different types of accounting for dividend income. So here, we already outlined the different dividends: cash, stock, property, liquidating, and scrip dividend. And we look into the effect on dividend income, number of shares, amount of investment, and the cost per share. Now, let's go to the another problematic type of dividend. Whenever we have your cash in lieu of shares, and then we have your shares in lieu of cash. So what do we mean by this type of dividends? So in your cash in lieu of share, it should have been your original dividend is a share dividend or a stock dividend. But what you actually receive, or the actual dividend, is a cash. Okay? The should be dividend or the original dividend is a stock dividend. But what you actually receive as a dividend is a cash. Therefore, what is our treatment here? Your treatment is that as if the shares were sold to receive cash. As if the shares were sold to receive cash. And since we're talking about sale, here. Since we're talking about sale, again, what do we need to compute when there is a sale? The gain or loss on sale. So determine again if that is FVTPL or FVTOCI. And remember the rules. In your gain or loss on sale, in your FVTPL is placed in your profit or loss. FVTOCI is placed in your OCI. And aside from that, you need to determine the type of shares sold, whether it is the old accounting or the new accounting. Old accounting or the new accounting. Why? Because under the old accounting, what will happen is that there will only be an embedded amount on your investment. Okay? If you try to look at it on your old accounting, it will only increase the number of shares, but it will decrease, but the amount of investment will have no effect. Therefore, there will be a cost per share. So in computing for the gain or loss here, we have here your cash received. That is the amount of the actual received dividend less the cost of shares. So what is this cost of shares? This is the cost per share multiplied by the number of shares sold. That's why it's important, again, to determine the effect of an old share dividend. How about for a new dividend? So you just have here your cash received. You compare the fair value of the should-be shares. Okay? Fair value of the should-be shares. That is now your gain or loss. Okay, so what's the difference? Here, we need to compute for the cost of shares. Why? Because the cost of shares are embedded on the total amount of investment. While for the new one, we don't need. Why? Because we base it on the fair value of the should-be shares that we receive, because it is not embedded. If you try to look at it under the old one, it is embedded on your amount of investment. That's why there's no effect. While on the new one, the investment should increase because of that shares. Therefore, there is an automatic amount out of the shares that we sold. And what is that automatic amount? That is the fair value of the shares to be received. So generally, it is quite easy to account for a cash in lieu of shares if that is the new one. But if that is the old one, you still need to get for a new cost per share and you multiply it to the cost of the shares sold. How about if that is a share in lieu of cash? In share in lieu of cash, the original dividend is in the form of a cash dividend. The original dividend is in the form of a cash dividend, but what is actually received is the amount of what actually is received is the amount of your shares. So here, as if the shares, as if the cash were used to purchase new shares. If in your cash in lieu of shares, it is sold, in your shares in lieu of cash, it is a purchase. So if this is a purchase, therefore, it will increase. Right? So what is your initial entry at the time of cash dividend? Your initial entry or at the date of declaration, your entry will be a debit to dividend receivable and credit to dividend income. After that, a date of record, no entry. And then at the date of payment, you receive shares. So you debit financial asset at FVTPL. And then you credit now FVTPL or FVTOCI. And then you credit now your dividend receivable. So what is the effect then? The effect is that you still have dividend income because it will increase. As to the number of shares, of course, it will increase also. Why it will increase? Because again, you will receive new stock dividend in the form of as if it is purchased. How about the cost of the investment? It will also increase. Therefore, what is the effect on your cost per share? It could increase or it could decrease depending on the total or net effect of the number of shares as to the total cost. This is the only time all items are affected. This is the only time that all items are affected. Why? Dividend income is affected, number of shares is affected, cost per share is affected, and your cost is affected. Unlike the other one, our rule a while back, if the dividend income is affected, all others are not affected. But if the dividend income is not affected, all others can be affected. So kung papansinin ninyo yung naka-yellow na highlight, pag naapektuhan yung dividend income, yung iba hindi naapektuhan. Pero i-highlight naman natin ng the blue. Pag naapektuhan or pag hindi naapektuhan yung dividend income, pwedeng maapektuhan yung iba. Pero there is a chance that all of this will be affected. And when is that? If it is a shares in lieu of cash. Why? Look at this shares in lieu of cash. Dividend increase, number of share will increase, cost per share will increase, and the total cost of the investment will the cost of the investment will also increase. That is the loan time when all of the items might be affected. Okay. So what if there is a change on the amount of dividend income? How to account for the difference of the original dividend and actual dividend? So in cash in lieu of shares, the difference between the original dividend and actual dividend will be a gain or loss on sale. While if that is a share in lieu of cash, The difference between the original dividend and actual dividend will be either an addition or a reduction on the dividend income. It will increase or decrease the dividend income. Take note on the accounting for the difference between the original dividend and the actual dividend received in a cash in lieu of share and a share in lieu of cash. Cash in lieu of share and share in lieu of cash. Now, what are other items still that we need to take note of or we need to discuss in your investment in equity security? So, in your investment in equity security, we still have the concept of your share split. Okay, we have your concept of share split. So, what is this share split? Your share split is the decision of the company wherein the shares might be increased or decreased. Shares might be increased or decreased. If it is increased, it is known as a split up. If it is decreased, it is known as a split down. So what is the effect of this split up and split down? As to dividend income, no effect, no effect. As to number of shares, in your split up, it will increase. In your split down, it will decrease. As to the total cost of your investment, no effect on both. And how about the cost per share then? If your number of shares will increase in a split up, then your cost per share will decrease. In a split down, since your number of shares will decrease while your investment is still constant, therefore your cost per share will increase. That is your share split. Next one, special assessment. So what is the effect of special assessment? Special assessment has no effect on dividend income, number of shares no effect, but it will increase the amount of our investment. Therefore, the cost per share of our investment will also increase. Why is there a special assessment? Normally, this is assessed during the sudden increase on the value, and there is other financial difficulty that the entity is currently facing. Therefore, the corporation could charge its investors additional investment in the form of a special assessment. Now, aside from a special assessment, we have the concept of stock rights. We have the concept of stock rights. So in your stock rights, we have a problem into the accounting of your stock rights. So they say that in your accounting for stock rights, it depends whether it is FVTPL or FVTOCI. Okay? In your accounting for stock rights, they say it is dependent whether it is FVTPL or FVTOCI. But I would rather want you to understand the stock rights, whether they are accounted as separately, accounted for separately, or not accounted for separately. Okay? It can be accounted for separately or not accounted for separately. If it is accounted for separately, it means that you need to separate the value of the stock rights from the investment. While in your not accounted for separately, it is considered embedded on the investment. Okay? Embedded on the investment. Therefore, upon receipt, upon receipt of the stock rights, your entry under accounted for separately is a debit to investment in stock rights and a credit to your financial asset, whatever is that, whether TPL or TOCI. But generally, they say that you can only account for separately in OCI and you cannot not accounted for separately in TPL. So, ganyan yung current treatment natin. Pero again, I just want you to understand it by accounting it separately and not accounting it separately, not because of the particular designation, whether it is OCI and TPL, but for the purpose of our academic quizzes or assessments, we will use whether it is OCI or TPL also. Now, for receipt, since it is accounted for separately, you need to separate it from our investment. So you remove it in our financial asset. In your not accounted for separately, you will only make a memorandum entry. You will only make a memorandum entry. Now, upon exercise, your entry will be a debit to a financial asset, whatever that financial asset is, and a credit to your investment in stock rights and the cash. While in your memo and in your not accounted for separately, it is only financial asset and a credit to cash. Therefore, the amount which will increase our investment under your stock rights is that for accounted for separately, the cost of the stock rights and the cash, while for not accounted for separately, only your cash. So stock rights and then cash accounted for separately, not accounted for separately. For accounted for separately, the total amount of your investment or increase in investment is based on your stock rights and your cash, while for not accounted for separately, only your cash, you will not add any stock rights. Why? Because the stock rights are considered embedded. It is considered embedded. Now, as to your expiration, when the stock rights will expire, under accounted for separately, you debit loss on stock rights and then you credit investment in stock rights. While for not accounted for separately, only memo entry. Only memo entry. Therefore, in this particular event, in your expiration, there can only be loss. There can only be a loss on accounted for separately. There can only be a loss on accounted for separately. How about sale? Only accounted for separately can be sold. In not accounted for separately, they say it cannot be sold. It cannot be sold. Why is it cannot be sold? Why can't we sell the not accounted for separately? Because again, it is considered embedded. It is considered embedded. It is considered embedded. But some say you can still sell it by decreasing your investment. Okay, by decreasing your investment. But generally, since it is not considered, it is only considered embedded, it is hard to get for the amount of that investment on our total amount of financial asset. So therefore, per our accounting for now, we can only sell your accounted for separately. Not accounted for separately, since it is embedded, it is hard to get an amount out of it. Okay, so that is for your stock rights. That is for your stock rights. Now, as to your theoretical value of your rights, please just do not forget on how to compute whenever it is right on and whenever it is considered as X right. Lastly, we have your reclassification. Reclassification. So in your reclassification for equity security, reclassification for equity security, so we only have two, right? FVTPL and then FVTOCI. So can we change from FVTOCI to FVTPL? Can we change? Or can we reclassify from FVTPL to FVTOCI? So vice versa, can we reclassify? The answer is no, we cannot reclassify. We cannot reclassify whether FVTPL to FVTOCI or FVTOCI to FVTPL. Okay? Take note, reclassification under PFRS 9 is only applicable to debt securities. So pag may lumabas na tanong soon, how much is the reclassification gain or loss on your FVTPL equity? Answer, none, because it is not allowed. FVTOCI, none, it is not allowed. Kaya nga nung nag-outline tayo dito sa taas, tatlo lang yung lagi nyong titignan. Gain or loss on fair value, dividend income, gain or loss on sale. Yung other items, hayaan nyo na yon, madali ninyong intindihin. Bakit kaya walang gain or loss on reclassification na nilagay ko dyan? Kasi under our standard, you cannot reclassify. You cannot reclassify. Take note, PFRS 9 only allows reclassification of debt securities. Therefore, the reclassification on equity security is not allowed. Reclassification on equity security is not allowed. Ingat kayo dito, whenever there's a reclassification on equity security, wag ninyo siyang i-reclassify. Wala kayong dapat sagot doon because reclassification is not allowed. Reclassification is not allowed. Furthermore, do not forget to account for any dividend on and ex-dividend. If there is a dividend on, you remove that in your purchase price. If that is ex-dividend, hayaan nyo na siya. Okay? And if ever it is a multiple purchase of shares at a basket price, do not forget again to allocate the price using your fair value method. If not, then you can use your residual method or residual approach. So that's all for financial asset under PFRS 9. Financial asset under PFRS number 9.